Mitt Romney wins the Florida primary with almost 50% of the vote. Facebook preps to go public, and Amazon disappoints as the first trading day in February tries to kick off with a bang. I'm Alix Steel, and the Morning Call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix Steel with The Street, and together we bring you the Morning Call. Happy Wednesday, everybody. So we have Stocks, Scott, had their first best start of the year in 15 years. But if you look at the action yesterday, we rallied higher but couldn't hold it, and then we faded. What does that mean headed into February, which is typically a negative month for stocks?
I think yesterday, ultimately, the market held up well. We started off strong, and then you had the PMI that came out that was less than expected. Then you had consumer confidence, which is a lagging indicator that was also less than expected. So the market came in, but you know what we did? We tested that floor again. We tested that 1303 to 1308, and the market held. We tested that 130, like 60 to 130.80 in the spiders. And you know what? The bears had absolutely no juice to break us below that. So right now we're doing some nice work above 1,300. We're starting to build a new base. Stocks are regrouping, and this means higher prices coming up.
So that means that on touching this dip and holding it, do you want to be buying all your long positions, adding to those tier ones?
Well, in this spot, it's been tricky too, and I'm still long, and I'm not as long as I actually would like to be. I was a lot longer earlier, but it was a tricky spot. The longer we stay above 1,300, the more confidence we're going to get, and also the longer we stay above 1,300, which let me just show you on the chart, the more these shorts are going to get scared and start covering. So here you are with the SPX. This is that gradual uptrend that we talked about many times, and then the accelerated uptrend. Now that floor that the bears were trying to test was right around here. This is around 1303, 1308. On Monday, it pushed through, came back above, so they couldn't close it below. Then yesterday, it was just another day in the life holding above, and now it seems like we're going to be testing this 1321, and then you have the January highs of 1333. If we do get a closing high above this in the next few sessions, you then have room to, I'll bring it all the way over here, to get to this area, which is about 1346 to 1355. And if that were to take place, you're going to see some people start chasing this market because everyone thought, we could pull back down to 1275, and not everyone's getting what they want.
That's a pretty compelling case for momentum in the short term, but we do have that jobs number on Friday. Is it also prudent to start taking some profits there? Just trim slightly ahead of that number.
Well, I think some traders trimmed in the last few days. Like I started trimming and hedging since last week, and now that we're not pulling in, we all have decisions to make. Does that mean we go putting positions back on in front of what could be a jobs number Friday? But today's only Wednesday, so we have Wednesday and Thursday to deal with it. We can create cash flow, we can stick with positions and see where we are coming Thursday's close to see what type of risk we want to take on Friday. Because if we get a jobs friendly number Friday and you're waiting, you could be buying this market at 1345. And so you have to have at least some exposure now, and then you have to use your risk tolerance on how much you want to have moving into jobs Friday.
Not to mention that if we have a disappointing number and we sell off, just where will the bulls defend? It might not be that big of a dip, perhaps.
Well, it could be that floor. So we could be right back testing that floor again. So until that floor breaks, you trade against it.
All right, I wanted to highlight Amazon, of course. They had those disappointing earnings after the bell yesterday, but there were some shining bright spots, and we wanted to highlight one of them, and that's cloud computing. The company said that cloud storage services had about over 760 billion objects. That's growth year over year of 192%. Now, you obviously just don't buy Amazon for the cloud world, but what did you think of that small slice of the statistic? Is it actually good for other derivative plays in the cloud computing sector?
The cloud computing area was a really hot sector like 2 years ago. They've had big moves. They've been consolidating since. A lot of people are talking about this is the future of tech. These stats from Amazon helps that case. You saw that it started to come around when you saw VMW or VMware's earnings report.
And even EMC as well.
Yeah, both of them. Take a look at both these charts. They both look good. VMW first. Here was your earnings move. It's been going sideways, holding above this gap. I also will be looking for a trade in this above 92.50, 93. Gets above this little flag type pattern. You have 95, and then you have right back to 100, 105. And I know a week or so ago, Stephanie was talking EMC. Unbelievable move from breaking this downtrend around 22. And it also going sideways, can't pull in. I think traders could catch a little cash flow trade above 26 for a move that could take you all the way back to 28, which is where you go to the old reference point back here from the summer. So, these two stocks look very good, and they're pretty girthy stocks with a lot of liquidity where you can get in and out.
And if you break down the earnings for EMC, even revenue grew 14%, earnings increased 17%, gross margins were up 64.5%, $2.2 billion in operating cash flow, free cash flow of almost $2 billion. I mean, these are some serious numbers. And I was reading today that some analysts predict the cloud computing sector this year could generate well more than $61 billion in revenue.
So you have to have some exposure here. So I don't think you need exposure to them all. You pick and choose what your beta is. And right now, if you want like slow and methodical, perhaps EMC, which is actually acting a bit frisky. If you want something with more beta, VMW is also acting well, but it moves around a little quicker.
And then two other names is going to be F5, we've been talking about a lot this week, also beat its earnings estimates and offered good guidance. And then we have Salesforce.com reporting later in February, but that seems to be much more of a trade rather than an investment, in particular Salesforce.
Well, first let's go to FFIV. Good earnings report. Little sloppy here, but still holding higher. You take a look at this chart, you will see it's still holding this earnings gap. The earnings gap started around 115. This was that gap from earnings going sideways, consolidating. As long as this big gap holds, you're showing bullish composure. I think you could be long some, but most traders will probably try and look at it for momentum above 125. And as far as CRM, a lot of people don't like the fact that its valuation is really, really high, so it's going to have to come out with some great earnings. So if you look here, though, for a trade, because earnings aren't for a few weeks, here's your downtrend. So if you see some of the other cloud computing stocks start to go, this could be a good trade above 121, and then perhaps it's around 128-ish into this resistance before earnings, and then you figure out what else you want to do. But I'm hearing those earnings from the sell side could be pretty good.
And also, it's interesting because like Amazon, there are a lot of other big companies that have a slice of the cloud, right? We can't forget about Oracle, IBM, Microsoft, Apple. I mean, so maybe those are maybe better plays as well as EMC for an investor who wants to stay diversified. What would you think? Not as a trader, but
I just think as a slice that just shows you how it's going to be involved in technology moving forward. So every company out there, no matter what you do, you have to have some business in the cloud or some type of cloud composure or cloud.
That was right. Composure, exposure.
Exposure.
I think that works.
There you go.
So, all right, we're going to be right back talking about some Super Bowl stocks. It's going to be really fun. We have a good segment for you, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Super Bowl is on Sunday, so we wanted to highlight some Super Bowl stocks, starting off with Pepsi. And the reason why I wanted to hit Pepsi first before we go into the much watched commercial space is because it's a more than $500 million industry in terms of chips and dips on that day alone.
Chips and dips, I love them on Super Bowl day. Go Giants.
$500 million. And Pepsi has about 12% of all snack market share on that day. Is this a fun play?
I don't know about fun, but Pepsi's something that people hold, and it goes up methodically. If you look at the chart here, maybe it gets a little sizzle from the Super Bowl. It just pulled into this trend line. It's been following since early October. I think, if you're not in Pepsi, you can nibble a little bit here. This is like you buy the pull-in trade above, around 65, but it has to stay above this, uptrend. And then for momentum, though, you have a double top here, short term, so above 67. That would be a spot to add for a potential move back to resistance around 69.70. I look forward to those Pepsi ads.
Well, and not to mention the fact that it's probably already baked in at this point, right? The people that they're going to go out and buy chips that day for the Super Bowl.
Yeah, but a lot of it's psychology.
Right.
People, if they have some cool commercials, maybe people are like, oh, let me go see what the stock's doing. At this point, I just think the stock could be a hold for those of you that want something a bit more conservative, and it will take time. It's not really a mover and a shaker.
Talking about eye-popping association. If we're looking at a Super Bowl ad, we're looking at $3.5 million per 30-second spot. And Anheuser-Busch spends a lot of money on these ads. And also the Super Bowl is the 7th most popular beer buying period. I'm surprised it was only 7th, by the way, actually.
I actually drink Bud sometimes just because I go to Super Bowl parties and I can't be a snob with my Sam Adams, because that's what I usually like drinking if I'm going to drink beer besides wine and tequila. But anyway, different days. Anyway, what I take from that too is last year for the same 30-second commercial, I think they paid $3 million. This year it's 3.5. So if that's like a barometer of advertising in the economy, so I guess we're moving in the right direction. As far as the stock's concerned, it's near its highs. It has an uptrend also. You look at the chart here. I think there's not that much opportunity, but this also, I guess, just like Pepsi, pulled in off the highs. So if you're a dip buyer, maybe you can nibble a little bit here. But if this closed below like 59 or so, then you could see some more corrective type action, and this probably wouldn't be good for the market. But I think, you nibble a little bit here, and then for this to actually get up and go, it needs to get above this 62.50 for a momentum type move. But this is more of the buy the dip. They have some good commercials, who knows, but they're always fun to watch.
And you can actually watch them on Hulu now. So it's this big debate on whether or not people are going to be watching the Super Bowl for the ads, or they're just going to go on Hulu, and the Super Bowl might lose some viewership. Actually. Anyway, I digress. I want to go to GM, also a huge buyer of ads. We're going to get January U.S. auto sales number later today. GM just has not been holding up as well.
Yeah, I don't think the Super Bowl is going to help GM.
Yeah.
But if anyway, they'll just spend money like they always do, even on all the benefits for everyone. But anyway, we won't get into that. Stock did have a move. We talked about this, I think, like a week or two ago as a bottom feeder type trade. So if you look at the chart here on GM, this is, I think, when we were talking about it, I think it could have been for options profits even, right around this 21. So it did have a decent move from 21 to 25, and for GM, that's pretty darn good. Now it's going sideways here. So if you're going to stay in GM, that's fine. I think it's going to have to get above this 25.60 in order to get some more momentum to the upside. I don't think it's going to be the Super Bowl, but I think it's a little slow and steady right here.
And if you played that big up move, can you still take profits here, or have you missed that really big opportunity?
I think you can take profits here if you don't want to be involved, but I still think it's holding higher. If you're on like a tier 2, maybe get to a tier 1, but I think you could trail it as long as it stays above. Let me see that level one more time here. I think it's around 23. And holds this nice size gain. That shows some strength here, and it shows that you can continue. I like Ford over GM, to be quite honest.
All right, let's go to Under Armour now. The average game watcher will spend almost $64 in game-related merchandise, apparel, and snacks. We were looking at Under Armour as one that might actually benefit from that.
Yeah, Under Armour, I love their stuff. I wear it. I run outside. It keeps me warm. A lot of the football players wear it. As far as the stock's concerned, it's bouncing off support. It looks okay. If you take a quick look at the chart, obviously Nike's been unbelievable. Under Armour, held to 70. It's coming up a little bit. There is some room to 85-ish or so, but then in order for it to get up and go, it's got to get above 85. But we're only talking 79 here. So in this overall range, there is some room before we hit some big resistance. But if you take a quick look at like something like Nike's at new highs, and that's been a much better trade.
So can you still add to Nike here at this point, or
I
do you
wouldn't.
think it's done?
I think you just got to trail it, and if you're still involved, congratulations, you held for a nice big run.
All right, and then E-Trade. It's the 5th anniversary of that E-Trade baby, which I happen to totally love. So we wanted to check in with the stock to see if it's actually doing anything.
Unfortunately, a lot of these like online companies are not doing really well.
You can imagine that because people are scared to probably put their money into it.
Yeah, and volume's down, and
Yeah,
people are like,
of course.
oh, what happens if we get a transaction tax, or who knows. But anyway, I love those commercials also. I love when he throws up in first class, you burps. It's a lot of fun. If you take a look here at the chart, though, the chart is really not doing well. It's showing relative weakness across the board, below every moving average, hovering at the bottom end of this range. I guess if you want to buy it down here, if you're one of those that like to buy bottoms, which I don't like to do, you could buy versus this. What's this level here? I think this level here is like 750. So you buy around $8, you have a 50-cent stop. If all of a sudden the market gets better, volumes go up, it's perceived better, you might have bought a bottom, but then the upper end of the range is around 10. So it's not acting well, but maybe the commercial gives it a pop.
All right, so we also want to go to some quick ways to make some cash. Obviously, everyone's waiting for Facebook to announce and file for its IPO. So as a trader, you're probably looking at LinkedIn and Groupon. How would you be trading them today off of that news?
Well, LinkedIn had a nice little move 2 days ago. Yesterday, it came in a little bit. I want to show you the chart of LinkedIn. I think LinkedIn's got to get above this 77-ish.
Do you think the Facebook news is already baked in?
Not yet.
Okay.
Not yet. I think the people will be talking about this for the next month. So if some, and I'm actually hearing their earnings should be decent, but I don't, but that's besides the point. I would say 77 to 80 gets above here with some volume. You have a move to about 90. We did catch a nice little trade in LinkedIn. When it did break first above this like 69 or 70-ish, it hasn't extended the way I would have thought. But again, there's still a lot of time here. Watch this downtrend. It's going to need a lot of volume there.
And Groupon, would you rather trade LinkedIn over Groupon right now?
They're two different animals. LinkedIn's very thin. It's hard to grab. It's wide. Groupon a little tighter. I see a different pattern, but it's something that's compelling to me. If you look at the pattern here at Groupon, I know there's a lot of questions about their overall business, but this is where it opened, and it was a horrendous IPO. Came back up, and it's tested this downtrend for about 4 months. So if this could finally get above like 2050 to 21 on some big volume, you could see a move to 24 to 25. It's been in some decent accumulation. And if people want to keep some of these stocks in the game, I would think sooner or later this thing has to break above this level, and it could be a good trade.
And we also wanted to hit on the rare earth stocks. First off, Rare Element Resources up 20% yesterday. This was due to analyst comments that said rare earth prices are going to stay pretty high. I'm assuming you missed this trade.
Me?
Completely.
No.
Not you.
Oh.
No, I meant one. If you didn't play it yesterday, is it done or you think there's more juice?
No, I think there's more juice. The volume in this stock has been unbelievable. This stock was one of the tails of the dog that wagged in this rare earth space. But if you look what happened earlier this year, it had a huge move, put it back on the map from, I hate to say from 3 to as high as 7, but this was big. And then it didn't pull in at all. Didn't consolidate. I was long a little bit around here. I added yesterday, closing the highs of the day in a very lethargic market. So to me, I think this stock gets to about 820 or maybe even as high as 10.
And Molly Corp, we also wanted to hit because it's up today. Their Chili's Molly Met is buying a 13% stake in the stock.
Okay, well, at least they're buying the dip there. This stock's been out of favor also. We've been talking about it and targeted here for the past 2 weeks, and it's been a little erratic. There's been some good trades here. Yesterday was a little disappointing, but now look at it today. Here's a chart. We've been targeting this ever since it broke this downtrend, right? It broke this downtrend right around this 30. And even though it wasn't getting up on its horse and going, it still held above it, putting shorts still on the ropes. And now with this type of news, maybe it finally, gets ignited to 35, 40. But this has just been one of those, trash for treasure trades and something that's come in a lot, and it's been a great vehicle for traders.
And Polypore International. Now, we've never talked about this before, but it was down 30% yesterday. The news I found is we had an analyst coming out cutting the rating on the stock to neutral from buy. That's it, to neutral from buy. Worried that LG Chem, which is actually a customer of Polypore, is going to start making its own products and therefore taking market share and not needing to buy the products from Polypore. Is that kind of sell-off way overdone here?
See, there's a problem with situations like this. Traders, even a lot of my traders lost a lot of money yesterday. They tried to buy a falling knife without a plan. In these type of situations, everyone's like, oh, this doesn't make sense, this doesn't make sense. But meanwhile, it doesn't bounce. You lose a lot of money in situations that don't make sense. So if you want to play a situation that doesn't make sense, you better have a plan. Because I'm still a little upset about this from yesterday. If you look at the chart here, look what this stock did. This stock went from as high as 57 all the way slicing through everything with no bounce whatsoever. And guys just like cost average the whole way down and they blew up their month, and you don't do that in this business. So for now, if you wanted to be long, you'd be long versus this 36.60.
Do you think that there's a lot of shorting going on too here, and then at one point are they going to cover with that kind of dip?
Well, it could be liquidation, and it could also be the shorts attacking it. So that's why you don't know. So you do a level versus a level. So what I'll do is maybe, I'll trade it versus yesterday's low, but if it breaks that low, I get out of the way. That low right here, I'm going to draw that line is what, 36.60. So it's opening up around 38. If you want to play it for some type of bounce, you think yesterday was too much, go for it. But if it breaks 36.60, you get out of the way. Maybe then if it puts in a low of like 34, bounces off it, you trade it versus that low. That's the only way to play trades like this. Otherwise, if you cost average in this type of situation, it could put you out of business.
And very quickly, in like 10 seconds, banks, does Goldman Sachs and the rest of the banks still have more room to run?
Yeah, Goldman Sachs showed a lot of relative strength with Morgan yesterday. I like them both. I think Goldman can get to 115, 116. Morgan could be above 20 pretty soon.
Especially that Morgan's handling that IPO for Facebook. All right.
A lot of cash.
Exactly. So wrapping it up here, it's a new month. Are you looking at new opportunities, considering we have seen rotation out of those stocks that did really well and out of those sectors that did well in 2011 into the ones that didn't do so well in the first month of January? Are you going to expect that rotation to continue or something different?
Well, I think our eyes and ears are open for whatever's going to take place. January, I'm not expecting the same type of month because it was unbelievable. We were up 4 to 6% depending on the indice. You could have bought the trash of last year for big moves. You had some continuation in some of the rock solid names. And there was a lot of great tradable action. So what you don't want to do is you don't want to get your highs too high, your lows too low. So if you had a great month in January, don't expect to have that in February. Just don't give much back and tack on to it. So if you had just say I can't say numbers. If you had your best month, don't expect it. Just have a normal month in February and keep tacking them on, and that's how you put together a year.
All right, good stuff. We will end it with that great advice. I'm Alix Steel from the Street. Happy trading, everybody.